Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. Then keep an eye out on the management that just joined us. That's Saxoff. They said that in fact the first quarter was good and they believe that the performance is sustainable. The stock has moved higher now. In fact, it's moved through the roof. It's up nearly around 18% odd. So keep an eye out on that one. And in the last month or so, I think the stock has moved from around 240 all the way to around 300. So please keep that in mind as well. The stock is up nearly around 38%, in fact, from lower 200s all the way to around 300
Today
rupees.
itself has added, what, 50 rupees?
50 rupees, absolutely. So just keep that in mind, just alerting all our retail audience as well out there. But moving on then, in a CNBC exclusive, former RBI Governor Raghuram Rajan talks about the impact of the ongoing currency crisis on emerging market economies. He believes that the state of emerging markets is way better than what it was in 2013 and that the rupee hitting an all-time low is not much of a concern. Let's hear him out.
It's early days, and I think the real problem is Turkey is an outlier, both in terms of the leverage that has built up over the years and the quality of policy, which has been pretty bad. So it may be an early warning. It may be something which doesn't spread more widely because Turkey is special. There are, of course, other countries which are in some situations of fragility because they have upcoming elections, they have a large current account deficit, they have a large fiscal deficit. But in general, emerging markets look a lot better than they looked in, say, 2013 when we had the taper tantrum. I think the rupee has been strengthening in real terms for quite some time. The inflation rate has been modest but slightly above world inflation rates. And as a result, the rupee needs a modest weakening over time. So I'm not too concerned about the rupee hitting an all-time low. It's more a factor of dollar strength rather than necessarily rupee weakness. But I would say that broadly, you want to look at countries with large current account deficits as well as a high level of debt. For Turkey, it seems to me that the right path is the path of orthodoxy. At this point, basically say, we didn't mean what we said about keeping interest rates low, and that's the way to curb inflation. We're really going to take control of inflation. That means raising interest rates, having a serious inflation target, bringing more central bank independence. I think that would do a lot to stabilize the lira. But it's important that it not be a one-off. It's not about raising interest rates once. It's about saying, look, inflation at 15% is not something we want. We want to bring it down to manageable levels. That will stabilize the exchange rate. For that, here are a set of policies which ensure that we will do it. Clearly, the amount of leverage that has built up is a big factor. Turkey has an enormous increase in private sector debt, a lot of it foreign exchange denominated, which is contributing to the problem. But I would say on top of that, for emerging markets, other than the level of debt, you want to look at the current account deficit. Oil prices have picked up in recent months. Of course, they're relatively stable right now. But some countries are very heavily exposed to oil. Also, I think you want to look at political fragility, upcoming elections. There are some countries which have a very serious possibility of a regime change, and that's worth watching.